Did you know that the Oracle of Omaha has a huge amount of money kept outside the stock market? Surprising, isn't it? Even though he has not revealed what he is intending to do with that money, we do have some thoughts on what he's planning. Also, in this video, we'll be talking about what's up with him recently. But before we start, make sure to hit the subscribe button and turn on the notification bell. Done? Let's get started. Warren Buffett, the CEO of Berkshire Hathaway, has received a lot of flack over the last decade for lagging the benchmark S&P 500 index. However, this does not truly reflect how successful the Oracle of Omaha has been in his investing career. Berkshire Hathaway's stock has increased 2,744,062% in value per share in the more than 5 decades that Buffett has led the company. In comparison, the S&P 500 has gained 19,784% in the same time span, including dividends paid. There is no way to compare the two. For those of you who think that Buffett has lost his touch, his company's stake in Apple has gained $74 billion in unrealized value over the last 4 years, and that doesn't include the more than $2 billion in dividends Berkshire has earned. Warren Buffett is still as brilliant an investor as he was a decade, 2 decades, or 3 decades ago. Wall Street and retail investors pay close attention when the Oracle of Omaha buys or sells a stock. We know Buffett and his colleagues were active sellers of equities during the second quarter because of a number of SEC filings. Berkshire Hathaway sold all 4 of its airlines, as well as reducing its shares in the US Bancorp and Bank of New York Mellon for regulatory reasons, which is to maintain its ownership stake below 10%. The most likely sale in Buffett's portfolio during the second quarter, based on what we currently know from SEC filings, is investment bank Goldman Sachs. Buffett and his staff have reduced the company's interest in Goldman Sachs from over 18 million shares held to approximately 1.92 million shares owned as of the end of March 2020. Buffett seldom reduces his holdings over long periods of time, so this broad brush selling action could imply that he and his staff are ready to exit Goldman Sachs entirely. Why Buffett has lost faith in Goldman Sachs is a mystery. Goldman performed admirably in the second quarter of 2019, which was plagued by the coronavirus sickness. Net revenue increased by 41% year-over-year, with the fixed income, currency, and commodities segment posting its greatest sales in 9 years and the equities section posting an 11-year high. Buffett may be concerned about Goldman Sachs' participation in mergers and acquisitions, according to my best guess. With COVID-19 wreaking havoc in the US and worldwide economies, investment banking development through mergers and acquisitions could be difficult in the coming quarters. Buffett and his crew are unquestionably walking away from Goldman Sachs with a lot of money that they put in. However, the precise motive for selling today remains a mystery. Cable services provider Charter Communications is another Buffett stock that is believed to have been reduced in the second quarter. What's the deal with Charter? The short answer would be that Berkshire has steadily reduced its stake in Charter over the last few years. Given that Buffett isn't a fan of gradually reducing his firm's interests, it's possible that his investing aides have been in charge of lowering Berkshire's commitment to the company. It also doesn't hurt that Berkshire Hathaway is up roughly 240% on Charter from its initial cost basis. Buffett is probably a huge fan of Charter's consistent cash flow and excellent capital return program. Charter earned $1.9 billion in consolidated free cash flow in the second quarter, and the business repurchased about 2.3 million shares of stock for $1.2 billion. These share repurchases are expected to be a big part of Charter's earnings per share growth. Charter Communications, on the other hand, no longer has the value proposition that Buffett looks for in the equities he owns. Cord cutting continues to be an issue for all content providers, and Charter's revenue growth is expected to be less than 5% in 2021. This appears to be a high price to pay for middling growth, with a projected price-to-earnings ratio of 32. Finally, we believe Buffett took advantage of the comeback in oil prices and oil stocks in the second part of the year to lower Berkshire Hathaway's holding in Occidental Petroleum, a drilling and exploration company. To be honest, Buffett's Occidental predicament is a little strange. He contributed $10 billion to Occidental Petroleum's acquisition of Anadarko Petroleum last year. In exchange, Buffett received preferred stock with an annual yield of 8%. When crude oil prices fell as a result of COVID-19, Occidental could no longer be able to afford Berkshire Hathaway cash dividends. Instead, it promised to compensate the Oracle of Omaha by issuing shares. The purchase thesis on Occidental proved to be solid in 2019. However, with a significant drop in global oil consumption in 2020, that assumption is now looking a little shaky. Occidental's plans to sell some of its non-core African assets in order to pay down its debt have fallen through. As a result, the corporation has little choice but to reduce capital spending, and it already slashed its dividend. Warren Buffett didn't sign up for this, and liquidating part of the stock received as a dividend could be a wise method to protect cash. With the 13 Fs due out in just over a week, we'll know precisely what Warren Buffett bought and sold in the second quarter. Because the US Securities and Exchange Commission compels all investment managers with more than $100 million in assets to file a Form 13F quarterly report disclosing any changes in share ownership, we know what the greatest long-term investor of all time has been up to. These disclosures bring a new degree of transparency to the stock market, allowing Buffettologists to get a glimpse into his thoughts. When Warren Buffett buys an interest in a company or adds to one that he already owns, investors see it as a vote of confidence. However, if he sells a stock, it may cause other investors to reconsider their own purchases. Buffett dumped a bunch of stocks as well, and one among them is US Bancorp. US Bancorp is the fifth largest bank in the United States by assets and the country's largest regional bank. It's also one of Berkshire Hathaway's oldest equities, with the Oracle of Omaha initiating his holding in the first quarter of 2006. Buffett is typically quiet on US Bancorp and rarely speaks about the stock. However, in the second quarter of 2021, he reduced it by 0.6% or 798,178 shares. This came after a 1.1% reduction in the first quarter. Buffett's decision to scrape a small portion of the USB holding contrasts sharply with what he has done with so many of Berkshire's other bank stocks recently. He's primarily slashed his financial sector holdings with a hatchet, and it's not like the regional lenders' profits have justified sticking on when so many of its counterparts have been abandoned by Buffett. True, USB's total return has outperformed the wider market by more than 5% so far in 2021, but it has lagged significantly over the prior 3, 5, 10, and 15 years. Berkshire's vote of confidence is undoubtedly appreciated by US Bancorp shareholders. With an 8.7% position, the holding firm is the largest institutional shareholder, ahead of Vanguard and BlackRock. One other stock is Chevron. Many people believed Chevron would join the ranks of other classic Buffett equities like Coca-Cola and American Express when Berkshire Hathaway initiated a new interest in the company in the fourth quarter of 2020. Chevron, after all, checks a lot of Buffett's boxes. It's a well-known American brand that, as of late last year, slotted comfortably into the value camp. It pays a large dividend, which is currently yielding 5.3% after a 19.5% increase in 2021. And because of the size of the holdings, more than 48 million shares valued at $4.1 billion at the time, it quickly rose to the top of Berkshire Hathaway's equity portfolio. During the April-June quarter 30, Berkshire Hathaway reduced its CVX holdings by 2% or 548,351 shares. At the conclusion of Q2, the residual position of more than 23 million shares was worth $2.4 billion. Although energy prices aren't projected to change dramatically in the coming year, the picture for oil and gas is significantly brighter, and it should only improve as the global economy rebounds from the pandemic's depths. In July 2020, CVX was able to take full advantage of the worst of the industry's troubles by acquiring Noble Energy in an all-stock deal worth $5 billion. Buffett has remained a learner and a teacher for a very long time now. If he's taking his money off of huge companies and has set up a huge amount outside of the stock market, it's pretty obvious that he has something in mind. With newer technologies coming up, there are more and more good companies emerging. Even though Buffett would not invest in crypto, he sure is a promoter of technologies that he can understand. We'll have to wait and see what exactly he's planning to do with the money, as wise men do not reveal their next step. Did you find this video informative or helpful? Let us know in the comments section below. Make sure to subscribe so you don't miss out on my future videos. Don't forget to like and share as well.